Welcome back to the XRP Insider Network, the channel where we break down the moves, the momentum, and the real reasons. XRP just blasted past 2.0 and why was right now could be the defining moment of the year. If you're new here, hit like, smash subscribe, and turn on notifications so you're locked in when we drop critical updates like this, because we're going deep into this move and what it means for you. Here's the fire hook. XRP didn't just creep above $2, it exploded, and the reason isn't random. There's a mix of legal clarity, institutional flows, global payment adoption, and a price structure that's screaming at traders and long term holders alike. And if you want to understand why now is the time, you need the whole picture, not just price charts. That's exactly what we're unpacking in detail. So stay with me. Let's start with the baseline. Watch why price moves are driven by catalysts. And right now, XRP has more catalysts stacking up than we've seen in months. But this isn't hype. This is structural, real world shifts impacting demand. First, the legal overhang that's shadowed XRP for years, the SEC lawsuit, has moved into a phase where major uncertainties have been resolved. Courts have delivered rulings that clarify XRP's status in ESOABI, and that certainty is massive. When regulators give the market clarity, capital flows, and in this case, it's flowing into XRP. But here's the nuance most people miss. It's not just any capital flow. This is institutional capital. Institutions don't buy crypto based on tweets or social media buzz. They buy it based on regulatory signals, legal clarity, and on-ramps that protect their capital. And now that large custodians and regulated platforms are listing XRP again or increasing liquidity, we're seeing real institutional demand, not just retail FOMO. Now let's talk Suri Global Payment Utility, the real-world application that sets XRP apart from many other markets. Ripple's technology isn't just theoretical, it's being adopted by banks and payment providers across Asia, the Middle East, and Latin America. These are regions where cross-border payments are huge, costly, and inefficient. Ripple's solution is faster and cheaper. And increasingly, those financial players aren't just testing it, they're integrating it, which means more real usage of XRP as a liquidity tool in global corridors. And that's not something that suddenly appeared. It's the result of strategic partnerships built over years. Think about it like this: price rises after utility, not before it. The network effect and usage statistics are now aligning with price momentum. This is a textbook case of fundamentals meeting opportunity. But let me break this down even further for you. When a crypto asset breaks a key psychological level, like two dogs are, traders pay attention. But why it breaks that level is what matters. In XRP's case, this isn't just a breakout, it's a confirmation of sustained interest and commitment by deep pocket players. These aren't retail traders buying the rumor. These are serious players allocating capital because the risk reward just shifted dramatically. So let's isolate the top reasons this move is happening right now. 1. Regulatory clarity is finally tangible. Major legal uncertainties have fallen away, reducing risk and opening the door to new capital. 2. Institutional demand is entering the space. Not just retail, and institutions move big money slowly but decisively. 3. Real utility in cross-border payments is driving adoption in markets that need it the most. 4. Technical structure and price charts, Tamishar, is triggering buy signals, which attracts momentum traders and programs. 5. Sentiment across platforms and exchanges is trending bullish, which feeds on itself as price breaks key levels. And right here, right now, all these alignments have converged. Now, here's the part a lot of analysts gloss over. Price isn't just a number, it's a reflection of liquidity pressure. When exchanges start showing net withdrawals rather than deposits, meaning more wallets are accumulating than selling, that's a signal that holders are confident and long-term players are absorbing supply. This reduces sell-side pressure and sets up a scenario where price can run faster and further. At the same time, we're seeing the order book depth increase at higher price levels, meaning there's real conviction behind the buying. It's not thin volume pumping price. This is choice solid volume with institutional participation signatures. Now let's talk timeline. Yes, markets ebb and flow, but the reason XRP moved above $2 now instead of 6 months ago or next quarter is because several time sensitive events converged. Legal rulings and regulatory news cycles aligned to reduce uncertainty. Institutional listings and custody solutions rolled out simultaneously across major platforms. Global payment integrations hit activation points where usage data became visible in the P&L for financial institutions. Algorithmic and technical trading programs triggered moves on breakout signals. This isn't coincidence. This is alignment. And here's something to anchor in your mind. When real-world usage increases, price follows. Utility doesn't lie. XRP isn't just a speculative token. It's a wow bridge asset in payment ecosystems that are operational today. That changes the game. Before we move to the next section, if this breakdown is giving you clarity and helping you see the why behind the movement, do me a favor. Hit that like button and subscribe if you haven't already. It helps other serious investors find actionable content like this. Now let's go deeper into the psychology driving this breakout, because understanding the market's mindset is just as important as understanding the mechanics. We often talk about fear and greed as if they're abstract, but price moves are triggered by real decisions, decisions by traders, funds, and institutions based on reward versus risk calculations. When a price moves past a psychological anchor, in this case $2, it flips the psychology from uncertainty to opportunity. Traders see confirmation. Long-term holders get confidence, and short-term players chase momentum. This feedback loop propels the move further. But here's the critical insight. Breakouts only sustain when underlying demand is real, continuous, and growing. In XRP's case, we're not looking at a one-off pump. We're looking at ongoing integration into global systems that create repeated demand for the asset. That's not hype, that's utility. And this is why now is the time, because the pieces that were once speculative are now confirmed developments that create sustainable demand. In the next block, we're going to break down what this means for future price levels, how retail and institutional demand could intersect, and what key levels to watch if this momentum continues. So keep reading. It's about to get even more tactical and insightful. All right, now that we've laid out why XRP surged above 2.0 and why this moment matters, let's dive into the implications, the patterns, and the levels that could define the next phase of this move. We've already established the structural catalysts, regulatory clarity, institutional interest, and real-world utility. Now let's apply practical market analysis to that framework so you know what to watch next and why this isn't just a short-lived spike, because here's the truth. Price moves become sustainable when both the narrative and the numbers align. First up, let's talk about demand zones. The price levels where accumulation is strongest. When a breakout occurs, price often retraces to test key support levels before resuming the trend. For XRP above 2.0, the next key support levels expected by technical analysts are near historical consolidation zones, typically areas where buyers stepped in previously. If price revisits these zones and holds, it signals healthy accumulation, not exhaustion. For traders, this is a cue. Corrections aren't threats. They're opportunities to enter or strengthen positions with lower risk. Now, pivoting to our liquidity flows, this is where large capital players make their moves. Institutions and trading desks don't just buy crypto randomly, they accumulate strategically to minimize slippage and maximize execution quality. When you see consistent buy-side pressure at ascending price bands, it indicates capital is flowing in over time, not just in a one-off spike. That's exactly the signature we're observing around XRP. But let's connect this to a fundamentals one, because price isn't just about charts. Ripple's technology is becoming embedded in payment infrastructures that handle real volume. That's huge. When banks and payment processors start using XRP as a settlement or liquidity asset, It creates periodic demand for XRP that's tied to actual transactions, not speculative trading. This means demand isn't just front loaded, it's recurring. And here's an underappreciated part. Cross-border corridors and Barchi, particularly between Asia and the Middle East, are where remittance volumes are massive and traditional FX solutions are slow and costly. Ripple's XRP-based solutions reduce time and cost dramatically. That's a value proposition that financial managers can quantify. When a CFO sees savings in real dollars, that's when adoption turns from pilot to production. Now let's talk about sentiment cycles because they matter. After a breakout, sentiment often shifts from cautious hope to confident expectation. But here's the difference between emotion and market structure. Sentiment drives entry speed, structure drives sustainability. The sentiment around XRP has shifted from skepticism due to long legal uncertainty to a cautiously optimistic consensus. And that optimism is backed by data now, not just hope. So let's anchor that. This price breakout is sentiment validating fundamentals, not the other way around. Most breakout rallies that fail do so because the market is chasing price without underlying improvement. That's not what we're seeing here. Now let's address the big question. If XRP is above $2.0 now, where could it go next? And what could derail this momentum? The short answer, next price levels are largely defined by lower liquidity clusters. Levels where historically large buy or sell orders exist. If demand continues to outpace supply, the next clusters become targets. And on the upside, psychological anchors like 250, 3 hours, and beyond become magnet levels where traders and algorithms place buy or sell orders. The presence of volume around these anchors often dictates how quickly an asset moves through them. But price doesn't move in a vacuum. It moves with market participants' actions and reactions. So here's what could support continued upside. Continued institutional interest and onboarding, increasing utility-driven demand from global payment corridors, strong technical support levels holding during pullbacks, reduction in sell pressure from long-term holders, high volume accumulation on exchanges with deep liquidity. On the flip side, here's what could slow or reverse the trend. Renewed regulatory headwinds or unclear guidance, macro-level crypto market sell-offs unrelated to XRP fundamentals, technical breakdowns at key support levels, sudden liquidity withdrawals from key markets. But here's the key point. When a price breakout is confirmed with volume, structural support, and real-world utility momentum, it's less likely to fizzle quickly. It becomes a trend, not a spike. Now let's talk timing, because now isn't just a random moment. This move above 2.0 is happening at a time when 1. Macro crypto sentiment is improving. Investors are rotating capital into assets with real catalysts. 2. Liquidity solutions for institutions are better than ever, meaning big players can actually participate without exposure risk. 3. Global payment demand is at a level where financial institutions are actively seeking optimized solutions. These synchronous forces create a market window, and opportunities like this don't stay open forever. So if you're watching XRP right now, understand this. You're not witnessing a random price blip. You're watching a convergence of structural forces that have been building for months, if not years. And when real-world demand meets capital flows in an asset with utility and momentum, price becomes the reflection of that alignment. Before we wrap this up, let's return to the psychology of the move, because understanding that helps you make better decisions. When a breakout occurs, some traders panic. They sell too early, they doubt the trend, or they react emotionally. But seasoned traders look at the underlying drivers. They ask, is this move backed by real demand, or is it speculative noise? In this case, the answer is clear. This move is backed by fundamentals. And that's why I believe this breakout is the beginning of a sustainable phase, not the end of one. Now, if you're getting value and clarity from this breakdown, and it's helping you see the market in a smarter way, do me a solid and a hit that subscribe and like so you don't miss the next big analysis. We'll continue to follow XRP closely, and I'll be delivering updates as this story develops. Thanks for watching, and I'll see you in the next breakdown.